right, time to make some magic. So this is yours to adjust accordingly. So just speak into the mic as much as possible, but not too close.
Okay.
Very good morning to you, Lagos. This is Smooth 98.1. Love music, love life on a Monday morning, a brand new week. And it is the 23rd of February 2026. This is the final Monday in the month of February. The month has galloped along so quickly, and we are so thankful to see another day and another week as well. My name is Ayokunmi Kekireko. It's going to be a very interesting morning on the show Business Express, brought to you by Into Switch. Yes, indeed. We'll be talking about some very interesting things this morning, and we'll be looking at Nigeria's next rate decision. Well, in case you want to find out, today marks the 304th meeting of the Monetary Policy Committee of the Central Bank of Nigeria. And it gets underway in Abuja with a decision to be provided tomorrow. Which way will things go as far as the benchmark rate is concerned? It's currently at 27%. So we'll be looking to find out if we'll get a hike, if we'll get a hold, or if we'll get a cut. It has been a hold in the last two meetings, if I remember correctly. Well, to find out where this just might go, my guest this morning will join me to answer those questions and a whole a lot more. In the studio, I have on this Monday morning, Deborah Adebayo. She's an economic research analyst at Coronation Research. Good morning to you, Deborah. Great to have you in here.
Good morning, Ayo. Thank you for having me.
Absolute pleasure to have you in the studio. Like I said, I don't usually get guests in the studio at this time of the morning, so it feels good having extra company here and in your person as well. So, looking at what is on the agenda, the 304th MPC meeting. Now, going into this latest meeting, I mean, how would you characterize Nigeria's 27% MPC rate? Now, some call it sort of restrictive on businesses. Would you agree with that?
Mm. All right, thank you very much for that question. So the reality is that the 27% policy rates at the moment is quite restrictive as it
Okay.
is. But you agree with me that it's meant to be because of the fact that it has helped us to achieve a low inflation rate and also stabilize the value of the currency. But it's quite tight when you compare on a global basis and also some other countries in the emerging and the frontier markets. So I see the tightness has actually feed into businesses. We've
Okay.
seen higher lending rates currently at about 30% for maximum lending rates.
Yes.
Also, business naturally feels this because you know it affects their working capital and also their expansion financing. And more recently, we've been seeing that banks are even more cautious and selective in the sectors or companies to lend rates to because of higher cost of funding.
Okay.
But another side of the story is that this level of tightness has helped to stabilize the currency, and most especially for companies that are import dependent and they need FX for their businesses.
Mm.
It sort of reduce their operation costs. So I think yes, it is restrictive, but however, they've been some important stabilizing role of that. Thank you.
Okay, very interesting perspective there. And talking about interesting perspectives, you can share yours with us this morning on YouTube and on WhatsApp as well. WhatsApp number is 0911 999 0981. You can also find us streaming live on YouTube at Smooth 981 FM Lagos. Smooth 981 FM Lagos. Okay, Deborah, let's walk down memory lane a little bit here. And I would like you to remind us of how we actually got here and why the Monetary Policy Committee had to actually hike those rates to start with.
All right. So we are coming from a period of macroeconomic instability and combined with loss of investors' confidence, specifically from 2023 down to 2024. We saw one of the biggest trigger is the sharp depreciation of the FX following the FX reform in 2023.
Mm,
We saw the FX rate moving from about 416 naira per dollar to about 1,400 levels within months.
that's a
This is
that's
a
a
very
big
sharp,
jump.
yeah, this is a very sharp depreciation in FX. And this feed down to even inflation. We saw inflation going from about 20% to about 34% in inflation. You agree with me that that is quite very high.
Yeah.
Another factor is that we saw the foreign investors' confidence begin to, dampen on the fact that we were operating on a negative real interest rate. That means that when inflation is higher than
Mm.
the real interest rate, it brings about a negative return to foreign investors. So
Okay.
they were a bit cautious with that fact, and also there were repatriation risk, that there were risks about when they come in, when they inflow their FX into the system, and what are there certainty about, be able to repatriate their FX back into their
Mm.
economy. So these are risks, or these are factors that inform the decision for the aggressive tightening we saw. So specifically in 2024, we saw that the Monetary Policy Committee upped policy rate by 175 basis points. That is moving from 18.75% to currently at about 27%,
Right.
which is
Right.
very aggressive. Another thing I also want us to mention here is the fact that there were some structural issues and the need for the monetary policy to also rebuild their credibility back
Okay.
to these foreign investors. And we've started to see the results. We've seen renewed investors' confidence on the back of this tightening. Thank you.
Right. I mean, looking at the aggressive hike in the rates from about 18% to about 27% that it is right now. Let us even look at the rates holistically here. So we had a rate cut in September. That was September 2025. Then we had a hold at the last meeting in November. I mean, what are your expectations for this latest meeting right now? How do you think it's going to go?
All right. So you agree with me, looking at the policy trajectory from last year, that they bring some level of consistency in terms of the MPC decision and what is
Yes.
happening on the macroeconomic standpoint. So starting with the September meeting, we saw a cut which signals that we've been seeing some improvements in the macroeconomic landscape. Starting with inflation, they've been able to see inflation number decelerate consistently, and also the exchange rate, we saw some level of stability in exchange rate, even appreciation. Last year, it appreciated by over 7%, compared to a sharp depreciation that we saw in 2024
Mm.
at about 41%.
Right.
So this shows that they've been seeing traction from the lagged policy impact. So coming down into this new meeting, we what we've seen so far is that we might have gotten to the peak of aggressive tightening because of a number of improvement that we've seen on the macro perspective. However, the debate right here now is that the timing of the easing that we're expecting, and also the pace at which they will start easing. So generally, what we've been seeing, the interesting part is that market is currently pricing a cut. We've been seeing rates crash even across the fixed income space. Um, from the OMO market bills and to T bills and also the bond space, we've been seeing rates drastically crashing. But from our own perspective, from the Coronation research, we expect that the Monetary Policy Committee might actually want to hold rates due to
Okay.
a number of factors. Right, one is the fact that there are liquidity concerns. Last week, the market opened the system with about over 4 trillion. We saw some OMO maturities in the system,
Right.
and all of these signals strong liquidity in the system, and if not properly managed, we'll see this liquidity chasing naira, which could renewed the pressure that we had earlier seen. So, however, we can see a mild cut as well on the back of the fact that the Monetary Policy Committee might actually want to support the real sector. Like I highlighted earlier, that rate has been going up, and it's kind of a bit tight for the businesses. So they might actually want to cut a rate in order to support the real sector. Another thing is that the fact that the market is already aligning, and we've seen rate crashing in the system. So
Right.
when we see a mild cut, the market might not they might it might not bring some sort of distortion as
Okay.
it may.
Okay.
It might not be some sort of distortion because rates are already aligning with that cut. And also we might also see an adjustment in the asymmetric corridor. You remember that at the last meeting they adjusted the asymmetric corridor, which sort of boost policy intermediation, whereby
Okay.
they
Okay.
discourage banks from keeping idle cash with the CBN,
Mm.
whereas so they can encourage them to take this cash and lend to the real sector who actually needs them for expansion purpose.
Right. So it's either going to be a hold or a mouth, because at this point, I don't know where to put my money on, but I guess we'll have an answer by tomorrow. And I'm glad you actually mentioned inflation. Looking at the inflationary numbers, because headline inflation actually slowed to about 15.1% in January of this year. And that was down from about 15.15% from December of 2025. Now, just very quickly, what is your outlook for inflation this year? Are we going to see a continued deceleration, or how is it going to turn out?
All right. So the most important point here is that inflation seems to have turned the corner. We've seen it move from about 30% levels in 2024 now to currently about 15%. And combined factors are responsible for this. Number one is the rebasing and the methodology adjustment that we've
Mm,
seen
mm.
from last year. Also, we've seen the lagged impact of the previous tightening in the policy rates. We saw all of this feed into that, and also the exchange rate stability. So our expectation at Coronation Research is that inflation would continue its deceleration for most part of this year, and we see it closing the year at about 10 to 11% range. However, we would have to actually emphasize that the pace of decline would be gradual, as
Okay.
opposed to a sharp decline. So also, we'd like to re-emphasize that there are still some risks to that coming from the global perspective. The geopolitical tension in the global space could actually feed into the PMS prices, which is harmful to core inflation
Mm,
and can make it
mm, mm,
remain elevated in the short to medium term. So generally, the direction is positive, but however, the path is not perfectly smooth.
It's not perfectly smooth, not as smooth 98.1. Anyway, as we wrap up on the show this morning, I just need to get your thoughts on something specifically. Earlier on this month, CBN Governor Gavin Cardozo warned that election spending could actually harm the economy. What exactly did he mean by that? And do you also share in those concerns that he expressed?
Yeah, so what is really highlighting here is that we could see some level of liquidity risk, especially considering the fact that we are in pre-election year and we are tilting towards the election cycle.
Mm,
And historically, what we've seen is that during election period, we see some fiscal injection into the system, and the risk there is that there are concerns about the gains that has been earlier accumulated. We could see a reversal if this liquidity is not properly managed. And you
okay.
remember that I earlier said that there's some sort of liquidity in the system as it is right now on the back of maturities and also recapitalization of banks. So we have a lot of liquidity in the system. So moving into the fiscal pre-election year and into the election year, if these fiscal injections are not properly managed, we can see some level of renewed pressure on the terms of exchange rate, because
Ah,
once we have more naira in the system, they could start chasing FX, and this could bring some sort of pressure on FX.
Hmm. And we definitely do not want that sort of situation to rear its ugly head, especially as the naira has sort of stabilized and has been appreciating in the last couple of weeks or thereabouts. Let me take a message here from Taya as we round up on the show this morning. Taya, who is in Aja. Taya, good morning to you. Taya says the federal government is departing from pumping millions to defend the naira under Emefiele's tenure. That is a welcome development. I just hope the upcoming elections don't negatively impact the little progress in the economy, because dollars, the exchange rate and inflation would be worth monitoring. All right, thank you very much, Tayo, for sharing your perspective there. And Tayo says they still don't have power. See, this issue of power, Tayo, since last week, something definitely is wrong. Have they carried a transformer? You need to go and find out about that one. All right, this is Gilbert Musa in Festac, who says, um, I'm happy that it gets brought to the fore that rates were still increasing, though mildly. And this increase, together with inflation, has corresponding effect on domestic price of food items, which has increased obviously in the last 2 years. The question is, how will the average citizen benefit? Well, Deborah, as we wrap up on the show this morning, maybe you can just give Gilbert some words of encouragement here, because looking at the numbers are coming down, but food is still expensive and so on. Just give some words as we wrap up on the show this morning.
All right, so we acknowledge the fact that we've been seeing some level of stability on the macro space, but I would like to say that there is something we call lag in economies. So when we begin to see this monetary policy hiking or trying to manage the stability of the currency, and also as well as bringing down inflation. It will take some time for us to for an average Nigeria to feel the impact because of the lag that I earlier mentioned. And also, at this stage where we are on fragile recovery,
Mm,
and I will say that that is why we earlier made the position of the fact that we would think that they might want to hold rates in order to ensure that the gains we had seen earlier is sustained, and we continue on that path. So my word is that if we can continue on this path, if the monetary policy committee would ensure that inflation is still well anchored, because right now we are still on a double digit. We've
right.
not gotten to a single digit inflation number. So there's still some level of risk. If it is properly anchored with the liquidity in the system as well, then in short to medium term, we'll start to reap the benefit. And I also have to acknowledge the fact that the the supply condition is actually improving on on the side of food. We saw
Okay.
food inflation coming to about a single digit, which is a positive benefit. But I would like to still reemphasize the fact that it takes a time, because there is a lag between this policy and when we start to see the impact as Nigerians. So let us keep cool. The committee would continue to anchor inflation, and we start to see the impact. Thank you.
Amen to that. The sooner we see the impact, the better for everyone out there. All right, it's time to wrap it up this morning. This has been Business Express, brought to you by InterSwitch on a Monday morning. Thank you so much to you, Deborah Adebayo. She's an economic research analyst at Coronation Research. Absolute pleasure. Thank you for sharing all the knowledge and information as well.
Thank you. It's my pleasure.
All right, do have a great Monday and a great rest of the week as well. All right, Lagos, thank you all so much once again for being a part of the show this morning. Business Express on Smooth 98.1. It's going to be a great Monday. More great music coming your way as we journey along into the new week. My name is Ayokunmi Kekere. Keep it tuned. Keep it smooth.
Brought to you by InterSwitch. Transaction solutions you can depend on.
Thank you.
Thank
Critical focus on an Nigerian
Turn
economy.
this off.
We see the bigger picture.
Okay.
Business Express.